So illustration 1, Wonder Limited manufactures a single product called Zest, and the following figures are for 1 year. They have given information at 50% level and at 100% level. They have given sales and production in units, then they have given sales amount, production cost, and they have segregated it into variable and fixed. Same thing related to selling and distribution cost also. They have given variable and fixed cost. Now they are telling that the normal level of activity for the year is 800 units. That is, normal capacity is 800 units. Now, they have said that fixed costs are incurred evenly throughout the year, and actual fixed costs are the same as the budget. So, they were same as the actual cost also is same, and the budget cost also is same. And there were no stocks for the Zest at the beginning of the year. That means there was no opening stock. Then in the first quarter, they have produced 220 units and they have sold 160 units. Compute the fixed production cost absorbed by Zest if absorption costing is used. Then calculate the under or over recovery of overheads during that period. Then calculate the profit using absorption costing and also using marginal costing. Chalo, let's do that. The first question is to compute the fixed production cost absorbed by Zest if production costing is used. Just go to production cost and go for fixed. So they have given fixed as 1,60,000 for at 50% level of production. So we don't have the per unit cost. That's why we have to find now the per unit A cost of per unit of fixed overhead of production. 1,60,000 is the divided by, they have given that it is 800 units will be produced for 1 year. So that is 200 rupees, 200 per unit. So while calculating for 1 quarter, they said that for 1 quarter they have produced 220 units. 220 into 200 per unit, that will be is equal to 44,000. Now question B. Calculate the under or over recovery of overhead during the period. So now they have given the production cost, and that fixed overhead is 1,60,000. This is for 1 year. So we have to find out that for 1 quarter. Under or over recovery of overheads. So now actual fixed production overhead, they have given that 1,60,000. This is for 1 year. So we'll divide it for 1 quarter. So 1 divided by 4, and that will be equal to 4,000. Now this is substitution for the above method. So you can use this also. Now how much it is actually absorbed. So absorbed fixed production overhead is equal to, this is for 220 units now, 220 into it is 200, that is exactly what we have calculated here, 44,000 for 1 quarter. So that we have to write down, 40,000, this is 44,000, and there is a over recovery of overheads, that is 4,000, but it has over recovery of overheads. The next question is C. Calculate profit using absorption costing. So I have to find out the profit using absorption costing method. Chalo, let's do that. Just look after the income statement of absorption costing. First they have taken sales, then production cost. In this they've included all this direct material, direct labor, then variable and fixed. This is the difference actually. Variable manufacturing overhead and fixed manufacturing overhead, and this will give to cost of production. Then add opening stock, then less closing stock, or add or less under and over absorption of costing. So then add administration cost, selling and distribution cost, then it will give you total cost, then profit or loss. Okay, chalo just do that. See, profit for the quarter under absorption costing. First, particulars, rupees and rupees. Write sales, or they'll call it as revenue. So it is 3,20,000. How did you get this? They have sold 160 units at 2,000 rupees. How did you get this 2,000 rupees? Just see this. They have given sales as 8 lakhs and the sale units is 400. So divide 8 lakhs by 400 units. You will get the 2,000 rupees. Okay. Then we get 3,20,000 rupees less the production cost. Especially in this absorption costing, both fixed and overheads, for fixed and variable overheads will be there. So variable cost, in the question they have given that variable cost is 3,20,000. This is for 400 units. 400 units. This is for 400 units. So just divide that by 400 units to 220 units, and if we divide that per unit we get 800 rupees. So that is 1,76,000 in fixed overhead. Fixed overhead, 220 units into per unit it is 200 rupees. We have calculated in about thing. So it is 44,000. Total of this is 2,20,000. Now add opening stock for this. Opening stock, and in the question they have said that there was no opening stock, so put it as nil, then less closing stock. Closing stock. So to find out the closing stocks, first they have given that in this quarter 220 units were produced and 160 units were sold. So the remaining will be 220 minus 160, that is 80 units. So 80 units will be the closing stock units for us. So take this 2,20,000 amount divided by 220 units. This is for 220 units na. So units, and out of that 60 units is the closing stock. So that will be 60,000 units. Put a bracket for minus symbol. Okay. Then we get 1,60,000. Okay, this will be the cost of goods sold. Goods sold. This is less for adjustment for over absorption. Absorption of fixed products, fixed production units, production overheads. So if there is overproduction, over absorption of fixed production overheads, we have to less that. If there is under, we have to add. Now we have over, so minus 4000. This we have actually calculated in the first a point, so just see that. And add the next add is selling and distribution overhead. This is last, distribution overheads. So in this, again they have given variable, so 160 units we have sold for that, and variable 1,60,000. Again this is for 400 units. 1,60,000 divided by 400 will get the per unit, that will be 400. So 400, 64,000. fixed fixed is fixed is given for 1 quarter. Fixed is given for 1 quarter, so just divide that by 1/4. So 1/4, that because we are calculating it for 1 quarter, so 2,40,000. Just it is 60,000. Total of that 1,24,000. Okay, and this if we do, we'll get 2,80,000. 1,24,000. This is called as cost of sales. Okay, and profit will be sales as A. Forgot to tell this. And cost of the sales as B. Profit will be A minus B. That will be 40,000. Next is the last question, that is calculate profit using marginal costing. So please look after the format once. The calculate of profit using marginal costing. Particulars rupees. Here sales, same thing, 160 units into 2000 rupees. Keep this as A, and it will be 3,20,000 rupees less production cost. Here we'll take only variable cost, not the fixed cost. Variable cost, same thing, 220 units into 800. Same as same as absorption costing. So it is 1,76,000. Now add opening stock. Opening stock is nil, I've said in the question, then less closing stock. Same calculation as you have calculated, but the amount there and here will change because of the we didn't write the fixed cost. So 1,76,000 divided by 220 units into 60 units, amount will be 48,000. Okay, if we minus that, it is 1,28,000. This will be called as variable cost of goods sold. Okay, variable cost of goods sold. Now to this we will add selling and distribution overhead. In this also they have given variable now. 160 units into 400 rupees. Same calculation, but we'll not add fixed. That is the difference in marginal and absorption costing, and this will be called as cost of sales. Just keep it as B. The total will be 1,28,000. Sorry, 1,92,000. So contribution is equal to, this is represented as C. C is equal to E minus B. Okay. So it is 1,28,000 less fixed cost. Now we have to less the fixed cost. In the production cost, it is 40,000. Thus we have done the calculation in marginal, and in selling and distribution cost, it is 60,000. Total of this is 1 lakh. So 28,000 will be profit.